If you've been looking for a high quality dividend growth stock that can weather market storms, you've come to the right place. Cintas is a true powerhouse in the investment world, and we're about to uncover why. Let's get into it. Welcome back, Thomas. You had just released an article for MarketBeat all about Cintas, so that's what we're going to talk about today. You were claiming it as a quality buy and hold forever stock at any price, and it's a high-quality dividend growth stock. So I just took a quick glance at the chart that was posted in that article, and I wanted to jump on a video as soon as possible and discuss it. So tell us more.
Yeah, right. That chart really says it all as far as the buy and hold quality of the stock, and we'll look at that in a little bit. But I've been interested in Cintas for like 20 years or more, ever since my days as a chef. It's a well-entrenched player in business services. And as far as hospitality goes, it's the people that does your laundry and brings you towels and brings you Band-Aids and burn cream. Now, the company is among the best run on Wall Street. Management has been incredibly foresightful in its pursuit of growth while maintaining the balance sheet. Part of the growth includes robust capital returns in the forms of dividends and share repurchases. As far as the pandemic goes, the pandemic was a real boost for this company and the entire labor services industry because there was a lot of consolidation, not only with the labor services companies, but also with the employers who are doing the hiring. So what happened for Cintas is they increased the number of clients they have, and their clients have since then increased the number of employees they've had, which provided a double tailwind for business growth. Now,
Well,
regarding the dividend, this company is a dividend aristocrat with 40-year history of increases and the power to continue increasing its dividend for at least another decade or two.
Well, back to your chef days, Thomas. That might have to be a new segment on MarketBeat, recipes
Right.
cooking with Thomas. We'll see about that.
For sure.
But can you highlight some things about their recent report? And along with that, Thomas, you have mentioned that this is one of the stocks that you can buy at any price. And so typically that means that it's a good long-term investment regardless of market price. But surely that doesn't mean that people really do feel comfortable purchasing at any price. So can you just kind of tell us, how can investors navigate that?
Well, right. This stock is unlikely to produce a significant correction. So really any pullback in price action is good. So what investors are going to want to do is just wait and look for any time that the price does pull back. Like, you don't want to buy at the peaks. That's going to whittle away your cost savings. But if you continue to buy this stock periodically in small amounts when there are price corrections and price weaknesses, you will be a winner over time.
All right, that's very helpful. Thanks for explaining that for us. Now tell us a little bit more about that report.
Yeah, so the results were a little mixed. The top line was only as expected, but it did show 9% growth. The best news of the report were that margins expanded more than expected and produced a solid beat on the bottom line. So the results aren't really a catalyst for a rally, but there are no reason to shed the stock. So the price weakness after the report looks like a buying opportunity.
All right, analysts and institutions are backing this stock. So why is this significant?
So analysts and institutions represent the bulk of invested money in the stock market. Where they go, the market follows and prices rise. Both the analysts and institutions have been buying this stock for years. The post-release activity includes one price target reduction, but 3 price target increases, and even the price target reduction is above the current consensus. What this is telling me is that the uptrend in Cintas will continue and that it is likely to set another new high this year.
All right, let's take a look at the technical outlook here, Thomas. That's your expertise, but what is happening on the charts? You had mentioned that Cintas experienced a pullback. So can you explain to us, what does that mean for investors? And is this a cause for concern?
Well, let's look at the chart. And what I will say is that this price pullback is absolutely not a cause for concern to investors. What we have here is a periodic correction within a strong uptrend that should result in another buying opportunity. I don't think we're going to get a 10% or a 20% correction, but we could get a 5 to 10% correction that puts the stock price down around the 420 to 430 level. And I think that would be a good target entry point for new money.
Fantastic insights today, Thomas. It's clear that Cintas is a company with a solid track record and a promising future. As always, we encourage our viewers to continue their own research by using the free tools that I've linked for you down below. Thank you so much for joining us today. We're going to catch you in the next one. Thanks, Thomas.